What is up? Welcome to the June 2024 market update. Hope that your summer is off to an amazing start. Maybe you're taking some vacation with the family, doing something good. Obviously, we're already way too hot here. It's insane. I think hottest June on record. So what else is new? I feel like we're saying that every year, and it just keeps going that way. But we picked Arizona, so what do we expect? In terms of the market, it's been pretty much a status quo in terms of our pricing, how many homes per month we're selling, the median sales price. We are seeing our average sales price dip down a little bit this last month or so. And oddly, that happens every year in the summer. So our higher priced properties sell less in the summer than they do in the spring and fall. And kind of what I would say is the more traditional sales are consistently happening throughout the year a little more. So it brings the average down. The median's exactly what it was last month, which was a little higher than it was 2 months ago. So the market is still holding really strong. We are seeing kind of some splitting off, especially of those overpriced properties sitting on the market a little longer, some sellers trying to push those prices. And because interest rates have stayed so elevated, it has made it really hard for buyers to be able to qualify for those extra amounts. And so, pricing, if you're a seller right now, is extra critical if you want to get the house moved. Stuff that's good, that's priced properly, is still moving really quickly. We're still seeing multiples on that. So it's still overall a strong market. I would say it's what I would consider pretty much a balanced market between buyers and sellers now, much more so than we've seen kind of in previous months and especially those previous past couple years. So what's happened recently financially is going to be really interesting for us to watch as we go forward. So as I'm filming this, the Fed just had their meeting, and this is one of the meetings where they do what they call the dot plots, which is the Fed members actually say how many increases or decreases or whether they're expecting to keep rates the same throughout the rest of the year. They do that for the market so that they don't spook it. So they want everyone to kind of have an expectation of what they're thinking. And what we saw was actually a split Fed. So there was a few members that didn't think anything was going to happen with rates, but overall, most of the Fed members are predicting that we are actually going to see a little bit of a drop in interest rates. The split was between members that want one rate cut between now and the end of the year and those that want two. And so I think that they're taking the approach right now that they're going to be patient, because the last thing the Fed wants right now is for them to lower rates too quickly and that to cause inflation to kick back up. So especially in housing, which has been one of the stickiest inflation measures. Good news is we had 2 inflation readings right before I started filming this, and both of those came in really positive, so lower than expected. So that is getting closer and closer to the Fed's target of 2%. And as they continue to see that trend, I think they'll be more and more likely and willing to think about rate cuts. Obviously, mortgage rates are indirectly impacted by that. And so as we see those rate cuts, we would expect that mortgage rates are going to come down. And that's where everybody's kind of predicting and anticipating is that end of this year, beginning of next year, these rates that are kind of high 6s right now, sometimes creeping into 7s, will probably be about a point lower is what people are thinking. What that means for housing prices will be really interesting, because we do think that there's some pent-up demand here that if rates drop a percentage, we might see more buyers enter the marketplace. And if that's the case, we could see some pricing pressure up again. We talked briefly about some of those lawsuits that were happening. We're going to talk a lot more about that next month, but that also could be interesting. And I think the pricing pressure, although a lot of people are expecting that to make prices come down on homes, I think depending on the price range and area, it could actually be also inflationary, interesting enough, and we'll talk about why I think that next month. It's really an interesting time. We have a lot of our buyers asking us what they should do right now, and if you've been watching these, you know what I'm going to tell you. You should buy a house when you're ready to buy a house. It's impossible to predict. If I knew what was going to happen next, I'd either be buying a bunch more real estate right now or I'd be selling the stuff we have, and I have no idea. If you're thinking about buying, it's the same principle we always use. Make sure you can afford it. Make sure that it's a home that you love. Make sure you're doing it for all the right reasons. And I would say the good news is probably whatever rate you have now within the next 12 months or so, there's probably going to be an opportunity for you to refinance that to a lower rate and kind of give yourself a raise actually monthly, at least on your outgo, right? Flip side of that could be true too, which is that, ultimately the market softens or something like that happens, I think overall the most likely thing based on what we're seeing right now is that prices still hold really strong through the fall. But because of, inflation coming down and the employment readings have been just slightly softer, they're still really, really strong, but we are seeing unemployment rates tick up a little bit. So between those two things, I think the likely outcome is the Fed drops rates at least once and maybe twice this year. And we do see that those rates come down in Metro Phoenix because of our growth. I'm not sure that we're going to economically be impacted the way a lot of the rest of the country is. And so I could see that having some inflationary pressure on pricing if things break that way. We've got an election, so who the heck knows? I think all bets are kind of off. And typically, if you're a buyer, as we get closer to election, it's not a bad time to think about buying. A lot of people kind of freeze up around that time, and you'll probably have a little bit less competition. So we're going to get through summer. We're going to see how this all shakes out. We live in Arizona, so if you're like me, you're getting 80 trillion texts already telling you that if you vote for the other guy, terrible, terrible things are going to happen to you. But I think we're going to be okay here in Arizona. I think we're doing really great. We've lived here a long time. It's an amazing place to live. And so many of our clients that relocate here once they get here can't ever imagine having lived anywhere else. So overall, I think things still look really good, really positive. We're going to keep you up to date on what's happening with the Fed, with interest rates, with unemployment, all these things as we head through summer and into fall and towards the election. But for right now, if you have any questions, please reach out to us. We'd love to talk to you and see how we can help. Till next time, we'll see you later.